does take us to our talk of the tape, all that is riding on tonight's results for what is, by the way, once again, the biggest market cap stock on earth. Nvidia's slide, Apple's gain, Microsoft's pain, making that happen once again. Bryn Talkington is with Requisite Capital, Malcolm Ethridge with Capital Area Planning Group, both CNBC contributors, and both join me now. Bryn, you first. All right, Apple is once again the top dog as it relates to market cap. What do you need to see tonight?
Well, they're expected to have 4% revenue growth, right? So this has been my issue for a while, is this revenue growth is still so anemic. I think the market wants to see excitement around what's happening in China. They are losing market share, but they're still, what are their sales in China? What's going to happen with a 17 phone? We know they're going to make billions of dollars. We know services will be strong. But to me, it's what do we need to get excitement around the stock? And ultimately, I still think it needs to be more than 4% revenue growth. I think Apple will be a market performer or slight under market performer this year, because I just still feel there's too much cloudiness about we need to have a refresh cycle. It's not going to be the 16, or it doesn't seem to be. So now I hear analysts are already talking about the 17 phone. We need to have revenues with the phones that we have today to start actually thinking about getting margin expansion, which I just don't see happening this quarter.
Malcolm, I do not remember a time in recent memory where we have had this much negativity about this particular name going into this particular report like we're going to get tonight. You say that Apple has a lot more to prove during this earnings report than they've had in the past 4 quarters. We're talking about 1 year. Why is there so much pressure on this company tonight?
Well, Scott, I think Monday's sell-off proved why Apple is so important and why Apple has to justify this lofty valuation and share price that it has. If you look at the mechanics of what happened in the market, Nvidia traded down, and instead of putting those dollars to work in treasuries or something else significantly safer, those dollars flowed to Apple. And so Apple has 2 problems. 1, they're still the safe haven trade and they still have to justify this higher share price. 2, they've had 4 quarters of declining revenue and shareholders are growing tired of having to wait to find out whether Apple Intelligence is actually going to be something meaningful, or if it's just really splashy graphics and PowerPoint presentations that got everybody's attention away from ChatGPT and whoever else was dominating the news cycle.
I don't hear anybody excited, for the most part, about buying this stock ahead of the print. Malcolm, is that how you feel as well?
I wouldn't be buying this stock right here. I think that the share price is significantly elevated above where it probably will be following this earnings report. However, I wouldn't be selling either, because I definitely think that Apple has something up its sleeve. I've been making the case for a little while now that this will be the year for fintech. And I think that Apple might be one of the companies to participate in a meaningful way. So to Bryn's point about them needing to diversify the mix and increase services revenue away from just relying on handset refreshes, I think that financial services is one way that they can do it. And I think that Apple is poised to make that happen for a ton of reasons that are happening under the surface right now.
Aren't you confident, Bryn, though, that Apple is going to get this refresh cycle? It's just going to be rolling. It's not going to be what it always has been. They drop a phone. We go to the September quarter, the numbers are gangbusters, and it's just going to be different this time. What's wrong with that idea?
Well, there's nothing wrong with that idea, and I think that's what we have right now. But ultimately, when you look at Apple 3-5 years from now, where you can't just rest on just upgrading the same phone, because if people are not upgrading faster, then it just comes down to services. And so I just think that Apple's in this unique position right now where we all have iPhones. Because the technology is so good, we don't need to upgrade as quickly as we used to in the past. And so then you say, well, what multiple do I want to pay for that long term? What are my other options? And for me, the reason why I sold half my position in December is I said I would rather own more Robinhood. I would rather own Uber. And so there are other names I want to deploy capital to outside of Apple, which growing at 4% doesn't get me excited about the company, regardless of the moat and the C-suite and the great team they have there. There's other places I think that are going to earn a better return.
Speaking about would rather own, I wonder if both of you would rather own Meta today than Microsoft, because neither one of you are in that name and both of you are in the latter. Malcolm, what's your takeaway from these earnings?
Yeah, I am very impressed that Meta continues to find itself in the right place at the right time. Right, we saw Meta shares sell off I guess it was early last year when Mark Zuckerberg made it clear that he was going to invest about 25% of their revenues into building out AI capabilities, and the market turned on him. And then we found out that he was in the right place at the right time. Now we find out that by building open source instead of deciding to go closed like OpenAI and others, Meta happened to be in the right place at the right time. And so I find it interesting that this company continues to defy gravity and continues to show strong growth in advertising revenue specifically. I do wish, to your point, that I had held on to my shares a lot longer. I bought it as a trade when it sold off. Thought that I was getting out at the right time, and apparently I sold too soon.
Bryn, what about you? You don't own it either. That being Meta.
I obviously have a big position in the Qs and JEPQ, so own it through there. I think this week what was really interesting where Mark Zuckerberg and team get a feather in their cap is with DeepSeek. It really goes to the entrepreneurial spirit of all of the coders and developers about open source versus closed source. And so as Meta continues to build out Llama, and I'm sure they're looking at DeepSeek to see what they can learn from there, I think that's another area that people are getting excited about Meta. And ultimately, if you look at Meta, they're an ad company, but they're expanding the Ray-Bans, not meaningful to revenue, but really great product. Instagram, Facebook are going to continue, and WhatsApp, going to continue to be advertising juggernauts. And as they continue to build out their AI, I think they're going to be able to convert the clicks from Instagram, WhatsApp, and Facebook into more revenue going forward. So it's definitely been a wonderful name that I think this week gets even stronger with their whole bet on open source versus OpenAI's closed source, which obviously hurts Microsoft as well.
Bryn, I'd be remiss if I didn't ask you about Nvidia. It's been a horrible week, as you know. You've been a longtime shareholder of this name. We're talking about one of the worst weeks in many, many years for Nvidia. How are you thinking about it today? You've had, 72 hours or so now to process this news about DeepSeek, what it's going to ultimately mean. You heard some CapEx numbers that are still being held to by a couple of the hyperscalers.
This, to me, is a sentiment shift. And as we've talked about, ad nauseum, the stock's been flat really since June of last year. You've now switched negative, where even though if I look forward, it has a 30 PE, it's still probably going to grow revenues 40+% this year. The market is saying that we have had a pivot in the market, sentiment shifted, and we think people are going to do more with less. Now, as an investor, you have to look at it and say, do I think those market expectations are right or wrong? Right now, to me, what I want to see, the stock has support at 116. It's got to build a base here because now it's really a broken chart technically. And so I respect that. And so I want to see this stock base out here. I sold some calls. I already had some 168 calls that I had sold before the sell-off. So I can probably close those out at a large profit. But I think it's not going to be a revenue-generating trade until at least earnings come out in February. But in the meantime, you really got to watch the technicals because it does look very weak. Yeah,
we have to wait a minute for these earnings. We always need to remind people of that as you get the flurry of mega caps, and then many weeks later you get Nvidia. So we're not going to have some real answers and commentary, we don't think. There's a quiet period, obviously, ahead of earnings, so you're not going to really get a good picture until the numbers and the guidance and the call actually happen. So from Nvidia, I'm going to ask you guys to stay with me for a moment, too. I want to talk about OpenAI, which is reportedly in early talks to raise up to $40 billion at a $340 billion valuation. $40 billion at a valuation, Kate Rooney, of $340 billion, which presumably would make it one of, if not the most valuable of private companies that we have ever seen.
Scott, that is what I'm hearing from a source that OpenAI is in discussions right now to raise what, as you mentioned, would be a record-breaking funding round in private markets. Would value the company at roughly $340 billion. This deal is ongoing, so that could change. But this is according to someone familiar with the deal. The person telling me SoftBank is going to be leading what is expected to be a roughly $40 billion round. Others are expected to participate. We don't have names yet. Some of that, I'm told, would also go to some of the AI infrastructure announcements, think of Stargate. And we did report earlier today that SoftBank is looking to invest up to $25 billion, just SoftBank alone, and would replace Microsoft if that does happen as the biggest shareholder in OpenAI. The Journal was the first to report this news, and OpenAI and SoftBank did decline to comment, Scott, but record-breaking number would make this maybe the most valuable private company in the world. It was last valued around $157 billion this new round, almost doubles that. If you think about ByteDance, for context, that's the TikTok parent company, $225 billion. SpaceX, Elon Musk's company, $200 billion. If this deal closes at the levels we're talking about, OpenAI is going to break a record here and be the most valuable company, at least on paper, in the world. CEO Sam Altman, meanwhile, was here in D.C. today addressing DeepSeek, some of the challenges there, and then speaking to lawmakers and administration officials, says DeepSeek shows very real competition from China and that computing power is more important than ever. OpenAI, as some context here, has been accusing that Chinese competitor to ChatGPT of basically ripping off their AI models to build another version at what seems to be a lower price. I spoke to Kevin Weil, too, the chief product officer. He said it's not the first time that China has tried to copy U.S. IP, hinted at a new model coming as well, Scott. But that is the latest from OpenAI.
Yeah, a lot of news today, which is why you're in D.C., because Altman was there, and then we learn about this incredible raise in valuation. Kate, thank you so much. That's Kate Rooney, as I said, live in D.C. for us. Let's now bring in iCapital's Anastasia Amoroso. Bryn and Malcolm are still with us, of course. It's nice to have you.
Good to see you.
Does anything that happened this week, be it earnings or the DeepSeek news, shake your resolve in any way on mega cap tech as a place to be?
No, maybe on Monday it did a little bit, but I think we've learned a lot this week. And I think what we ultimately learned is that some of the big tech capex on AI is not going away. And we've got some really reassuring results, I would say, from Microsoft and also Meta, especially on AI capex. Because, Scott, as you mentioned, the part of the AI trade that really was shaken up this week, it was the AI power and the AI semiconductors. But the fact that some of these mega cap companies are not budging and they're not changing their capex, that really re-underwrites the story that a lot of investors have bought into. And the other nuance that I really saw from some of those earnings reports is that they actually might accelerate and pivot more, skew their spending towards more GPUs, towards more server chips, and towards some of the custom silicon. And that's why you've seen companies like Broadcom, for example, do quite well. So that has not shaken that conviction. And the other takeaway I would say I had from this week is that as generalist investors, we were surprised by the efficiency gains. But I think if you are a tech analyst, if you are a power analyst, you've actually modeled some of these efficiency gains into your models, and yet the results were still expected to have higher power consumption for years to come. So I think some of the efficiency gains have been baked into the models, and as a result, I think we have a much better entry point in some of the AI power plays, for example.
I mean, you'd be a buyer of these pullbacks, right, in both power and semi?
Yes, I would. And it took a little bit of time to gain that conviction to work through it. But once we got those CapEx numbers, I am certainly a buyer of these names. I think there's really three things that really benefit right now. It's artificial intelligence software. And we've seen that kind of have a pullback, and certainly today, but the application layer is what's really going to gain the most from lower costs and quicker cost of trading, and we can get faster to the product element of it. So I would be buying software in a pullback. I would be buying some of the AI semiconductors, again, the custom ones, and also think about the networking. One thing that I didn't see the analysts change also is their data center projections. They didn't come out and say, we're going to reduce the demand for data centers. So that means all the equipment that was required to build out those data centers and the interconnect and the networking, that's still the case. So I would be buying those names. And yes, the power generation, that's tied to data centers. So buyer of that as well.
Hey, Bryn, are we going to look back at what happened this week as one of those, carry trade-like moments in the market where there was like full-blown panic for a little while, and then people came to their senses and realized that the environment is still good, and they went back into stocks and we hit new highs, and we don't really talk about that anymore. Are we going to look back at this moment this week in the same way?
I think so. I think broadly for the market, yes, because the market writ large was up, right? It was really the AI trade. I do think we're so early in this AI evolution of where we're actually going to go. I still feel like investors should have more questions than answers. There is no way that DeepSeek did this for 6 million, 10 million. There's just no way. That's absurd. And then, but to me, where I find I'm at a little bit of a question mark here is as you guys were just talking about with Kate Rooney, so OpenAI is going to raise $40 billion. What are they going to do with that $40 billion? I can probably assure you a lot of that goes to Nvidia. We talk about, the data centers. About 50% of the cost of the data centers is for GPUs. Where does that go? Nvidia. So I can walk all these things that investors should already know, but guess what? Nvidia is still down this week. So I think it is a curious time that we still have to distill through and look to see who the winners and losers are going to be over the next couple of years. Because right now, while Vistry and Oracle are up huge today, Nvidia to me should be a recipient of this, but they're not. And so I still have more questions on where you want to be positioned for new securities to add going forward.
What about, Malcolm, what transpired 24 hours ago? We had a Fed chair come out, no move, as was expected, of course. But Jay Powell was very much, we're going to wait and see. We're in no rush to do anything. They have a luxury, and he had a calmness and a coolness about where he thinks that they are right now. They think they're in a good place. And the market today, after initially reading yesterday as hawkish, seems to be in a decent place, too.
Yes, Scott, I think Jerome Powell did us a favor by just removing one of the variables that we knew we had to worry about during this earnings season from the table, right? So we still have to worry about all of the developments that happened in AI. I agree with at least half of what everyone else has already said regarding our overreaction and need to take some time to sift through all the data that's come out related to AI. But I think that the Fed chair basically telling us we're going to remain right here for longer, not necessarily higher for longer, not necessarily cutting rates, but right here in the middle, we're going to stay here for a while, kind of aligns with the thesis that I had coming into the year that we would probably get those cuts toward the second half of this year, simply because there was no reason to come into 2025 with cuts already pre-planned. We were getting too much conflicting data around things like core CPI, right? Still energy costs, still food costs, still shelter costs. All those numbers were conflicting each time we got them, and so it just wasn't enough to convict to improve the Fed's convictions to say now is the time that we need to be cutting, without having to be fearful of the fact that inflation could crop right back up at any moment, and here we go again.
I mean, that's why, many have sort of taken their view of the number of cuts we're going to get way down, including Jeffrey Gundlach, who spoke with us, as he always does, once the Fed chair is done with his news conference. Can we listen to that, the prediction from Jeffrey Gundlach on how many cuts we're going to get?
Maximum 2 cuts this year. And when I mean maximum, I'm not predicting 2 cuts. I just think that's the most you can possibly think about. And at the present moment, if you had made me pick a number, I would say now 1 cut would be the base case, and maximum 2, though, still.
1 cut. What do you think?
I think 1 or 2 sounds like the max is as correct. Look, the Fed is not concerned about the labor market at the moment. Some of the recessionary fears that we had back in August, they've been all wiped away. And the Fed is not overly concerned about inflation, but maybe they're a little bit hawkish in terms of how they view it. They've removed that language saying we're making progress. And tomorrow we get the core PCE number looking at 2.8%. One thing that Fed Chair Powell said that was really interesting, he said they're focusing on that year-over-year number because they can cut through the seasonality. Well, that year-over-year number has stayed stubbornly around 2.8%. So if that doesn't move much, that's why we may end up with 0, 1, or maybe 2 cuts. But I would say, Scott, that that's okay for markets. The reason why yesterday was a non-event for markets and not much talked about is because we have a solid economy. The GDP came out today, and we have some rate relief that's working its way through the economy. I think we're managing just fine.
How about, Bryn, lastly, the comment from Fed Chair Powell on valuations? I'd say they're elevated by many metrics right now, is what he said. Now, he qualified it, of course, that he was talking mostly about tech and AI. But his comment about valuation, I thought, was interesting. Really, anytime the Fed chair is willing to comment on the current level of equity prices is notable.
They are elevated. If you look at Kate, you look at any of the numbers, they are elevated. So I think he was just talking factually. And so this is not 2012 when these stocks were cheap, especially tech stocks. And so I do think that as we continue to get earnings from companies across sectors, but especially within tech, if you're not going to deliver, the market's going to punish you because these multiples are high in general. That being said, there's a few outliers like a Tesla where the market really doesn't care what your multiple is. It's still gonna say the future looks bright.
Guys, thank you. We'll leave it there. Bryn, we'll see you soon. Malcolm, of course, you as well, and Anastasia. It's good to have you back here at Post 9.